The iron ore prices sank below $100 a ton on Friday for the first time since July 2020. This means that iron ore prices have fallen more than 56% since May 2021 high of $230 a ton. Here we will look at what are the reasons for collapse of iron ore prices and what will be the fallout from this. But first, let us briefly describe what iron ore is. Iron ores are rocks and minerals from which metallic iron can be extracted. These ores vary in color from dark gray, bright yellow, or deep purple to rusty red. Iron is responsible for the red color in many of our rocks and the deep red sands of the Australian deserts. Iron makes up close to 5% of the Earth's crust. It takes around 1.6 tons of iron ore to produce 1 ton of steel. The world uses 20 times more iron in the form of steel than all other metals put together. Almost all iron ore, 98%, is converted into pig iron for steel making, which is then used in construction, transportation, energy infrastructure, and household appliances. Buildings, bridges, and other infrastructure around the world are built with the steel that's made from iron ore. You'll find steel in everyday household appliances like ovens, washing machines, fridges, and dishwashers. Every mode of transportation relies on the steel that's produced from iron ore. That includes planes, trains, ships, trucks, and cars. Steel is essential for ensuring energy infrastructure, like wind turbines and electricity pylons, continues to power the world. The world produces 2.5 billion tons of iron ore every year. With annual production of 930 million tons, Australia is the biggest producer of iron ore in the world. It is followed by Brazil, China, India, and Russia. Since the mid of 2017, iron ore prices hovered between $60 to $80 a ton, with an exception of a bull run in the middle of 2019, which saw iron ore prices to touch $120 a ton. Since April 2020, COVID-related lockdowns caused supply chain disruptions in the iron ore industry. This was also followed by production cuts due to non-availability of manpower to run the iron ore mines. However, Chinese economy opened sooner than the other economies. China is the biggest consumer of steel in the world, with over half of the production going into Chinese market. This caused a gap between supply and demand of iron ore. In the meantime, Brazil, the second biggest producer of iron ore in the world, faced disruptions in production. This further caused a shortfall in the market. Resultantly, prices of iron ore started to surge. A ton of iron ore, which costed $80 in April 2020, was now available for $230 in May 2021, a 187% increase. However, things started to change after that. Chinese government imposed restrictions on steel production. Chinese government wants to limit carbon emissions from steel production. Moreover, there are Winter Olympics coming, which will be hosted by China. The Chinese government wants blue skies during the winter. There is also expectation of lower demand of steel products in the Chinese real estate sector. The collapse of iron prices had a negative effect on shares prices of mining industry. This is because of the reason that lower iron ore prices will fetch lower revenues and, in return, lower profits. In the U.S. market, share price of Vale SA and Rio Tinto Group have fallen 29% and 28% respectively. Similarly, stock prices of BHP Group have dropped 31% over the past few weeks. Vale SA is the biggest iron ore producer in the world with a total production of 300 million tons annually. It is followed by Rio Tinto Group with a production of 286 million tons, and BHP Group comes third with annual production of 248 million tons. All these companies will be losing revenue on the back of lower prices. However, steel prices are still high. While there will be lower demand of iron ore from China, other economies like US and Europe might see a rise in demand in the coming years. We think most of you know the $3.5 trillion infrastructure package being proposed by U.S. government. There will also be significant infrastructure spending in Europe in order to cut back carbon emissions. Other emerging economies like India are also expected to have higher demand of steel products in the coming years. And then there is the case of steel producers. As a general rule, if the price of raw material is low, gross profit margins are higher. Maybe there are some steel producers who will enjoy higher margins due to low price of iron ore. Therefore, it can be assumed that there may be an opportunity for investors in the downfall of iron ore prices. Some companies that we deem fit to look at are Ternium, ticker symbol TX, ArcelorMittal, and ticker symbol MT. There are many others as well. We advise our viewers to look for better bargains in the current slump. Therefore, watch out for better opportunities. If you liked the video, please subscribe to our channel and push the bell icon for notifications. See you soon with another video. Bye-bye.